topic for me. Normally I'm equity outlook, India outlook. So this is a little bit of work, but I hope it is useful. So, and this is something which is very, very close to my heart these days. Because this is one thing which is actually governing everything in the world today. You know, where the interest rates are, how much liquidity is there in the markets, where the rates are, how negative they have gone. So everything, whether it is equity, bond, commodity, everything actually linked to this. So I thought it's a good idea to, so this is where we are. There have been 659 rate cuts since Lehman crisis. Globally, central banks are holding $24.6 trillion worth of assets. Interest rates are at a 5,000-year low. We didn't have a data beyond that. So it is the lowest I think we have seen in the history. Given the level of interest rates, a 1-year deposit would take 107 years to double in US, 1387 years to double in Germany, and 6,932 years to double in Japan. I repeat this. We have done, actually I've done this is my personal calculation, so there is no real error of judgment. And for those who are interested in how we arrived it, I'm happy to provide that. So it will take like roughly 7,000 years in Japan to double your money. There are $12.9 trillion of outstanding amount yielding less than 0% interest rate across the world. For the purpose of reference, India's GDP is 1.5 trillion. So there is roughly 7 times that of India's GDP, which is roughly yielding 0 interest rate as of today. So the nearly 40% of all developed markets benchmark bonds are trading at negative territory. So much so that a 50-year bond of Switzerland, 50-year bond, is yielding negative interest rate. But there is only one certainty that if you keep your money for 50 years, you're going to lose money. The most negative bond yield, as I said, is on 3-year Swiss government bond, which is yielding -1%. So I thought, a lot of us come across these data in bits and pieces. And sometimes we are unable to comprehend how much liquidity which is there in the world and where is the world going with this liquidity. Again, we tried to put kind of a chart as to, if you can see 1 year, 2 year, 3 year, most markets except United States have negative interest rates. Even on a 3-year perspective, even on a 5-year perspective, if you see 75% of the nations, at least the developed nations, are having negative interest rate yield. And Switzerland is the only country which is having like 100% of its bond issued by the government trading in negative trajectory. So I think, why are interest rates so low? And I would like to speak that, what is it which is relevant for us? This data is very interesting. But what can I get apart from knowledge and saying that I can sound knowledgeable at some forums? मेरे लिए इसमें क्या है? So it actually, these are unprecedented times. And if you look across, it is relevant more than any time ever before for all your businesses to keep a track of this, So since you mentioned, and it's a closed forum without any SEBI and media, so I hope we can talk. Is there a media here?
Yes, there is. Who's putting it on the website?
You're not putting out business.
Okay. So I actually went and made a presentation to one of the large corporates and actually argued with him as to how can you take advantage of all this. And at that time, we actually advised him that I don't know what happens on this Brexit, but this 150 bips of interest, 150 to a dollar, looks any which way stretched for both, given our view on dollar and given our view on pound. So I actually told him that why don't you borrow money and at least diversify part of the holding into British pound. So he heard me and he told me that, it looks very speculative here, we don't understand it. Okay. I said, sir, it's not a question that you don't understand. The kind of world which you are living, you have to understand. There is no choice but not to understand. I am not telling you to speculate. How are you so comfortable borrowing money in dollar? All I am saying is you just borrow in pound. And if you have to swap, you swap it. Mr. Mahajan will help you to swap the currency. So he said that, okay, I'll consider. So on the Brexit day, when it happened, he called me. So now, effectively speaking, even if he had taken 5-10% of his portfolio bet on UK pound, 10% of the portfolio bet on UK pound, I think whole of his interest cost would have got covered. So this is the implication, and I must tell you again, I'll give you one more example as to how people are using it. So we are big shareholder and a big fan of a company called SCL Technologies. Okay, I will tell you this company is being built purely understanding, apart from software and information technology which they understand, but is being built purely understanding the foreign currency markets. Because when they are able to get a contract for 4 or 5 years, they are saying that we will hedge. And at the same time, a lot of companies which are very big and very large saying that we don't understand this. So out of, if there are 20 very large billion-dollar transactions which have happened, roughly 8 or 9 of them have gone to SCL Technology in the last 4 or 5 years. And because of this strength of theirs, and Mr. Nadar personally explained to us one day that, what is there to understand? I am saying on a next 4-year basis, if I'm going to spend these many dollars in the next 2 years, I'm willing to take a little bit of risk to say that I will hedge it and I will get maybe 30-40% hedging cost, and part of it I'm willing to give it to my customer. There's nothing so complicated in this. So I'm saying this low interest rate and the currency fluctuation which is happening across the world can be a great friend for all the people who are working in treasury, for all the people who are working in the finance department. So do not treat this volatility or the fluctuation necessarily as your enemy. I am saying, like in the stock market, I actually pray for volatility. What else is there left? If there is no volatility, there is no future for people like us. Because if it is going one way, it will become so much risky to make money in the market. And if it is going other way, it will not make sense. If there is only volatility, then only people like us can differentiate and say that this is not risky and this is volatility. So I think, if you look at what is happening globally, so there are 3 major things which are happening again, which can be very big and large for even Indian corporation from a perspective. So we are seeing there is a big share buyback across the world. So American corporations in the last 5 years have bought more than $2 trillion worth of shares. It's being bought back, which effectively means what? That a guy like Warren Buffett, who said that I do not want to leverage, but looking at such low interest rates, even he is saying that if I'm getting money, or a 30-year money at 2.5%, 2.5%, 3%, I might as well buy. My equity is definitely worth much, much more than that. So I will do a share buyback on one hand, and I will do a leverage on the other hand. Then there is massive flow in the bond markets. And this is what is important. Why are people putting money with certainty that you are going to lose money even if you keep it for 30 years? The only thing is that people are expecting that bond prices still will go up. So rather than paying for the yield, they are actually paying for the appreciation of the bond. And if I would have said, let's say 2 years back, forget long time back, that 75% of the developed market bond can go into negative yield territory, people would have thought that Madhu Kela ka pat gaya and he's gone bonkers. But the reality is that is what is happening. So the people who are buying these bonds, they might be thinking actually the yields are going to go much, the appreciation in the bond will still be there even though there is no yield out there. Where can the yield go from the current level? So we have a relatively firm view, even though it is not a subject, and we can claim that we are on the top of the subject, but we can't claim a mastery out here. But our view is that at best it is only going to be gradual lifting of this liquidity, because the kind of money which is being put up and the kind of growth scare which is there, 40% or more nations in the developed markets are even struggling to get 0% growth rate. So we do not believe that this liquidity is going to be easily sucked. And if at all, it is going to go very gradual. And if there is a fiscal stimulus, now the only way they can bring back growth, they are talking about, first it was infusion of money, now they are talking of fiscal stimulus. So we are talking of Japan now doing actual spending to lift inflation and to lift growth. So if they do all of this, we do not see, at least in the next 12-18 months, and the topic was for 2016-17, so it's our firm view that these conditions are here to stay at least for 2016-17, and we do not see a quick reversal. And a lot of people worry about what will be the ultimate implication. I don't want to argue today. It can be very, very scary, and that picture should not be painted. But right now we don't see it. At least for the next 12-18 months, we don't see that scare happening. So obviously emerging markets, including India, are big beneficiary of this liquidity. Otherwise there would be a massive problem in a country like China, which is leveraged to the extent of 225% of GDP. But for this liquidity, they are able to keep the interest cost under control, and they are actually able to get dollar money. Even, for instance, even India, we are very big beneficiary, all these FII flows which we come. So we are struggling in our mind that, how can someone buy this company at 40 PE multiple? How can someone buy this company at 35 PE multiple when the growth rate is 15%? First quarter results are down, actually bad in a historic sense. But the stock prices continues to go up. Nifty is up 10-12%. So it is essentially happening because of this. Now this is the point, most important point which I want to make today. So what is happening actually because of this global liquidity, the small shift from the bond market into equity market will provide kind of a floor for the equity markets in times to come. Because bond market में तो clear bubble है. उसमें तो कोई मतलब even my driver can say, how can you lose money if you invest for 50 years? So there cannot be better example of a bubble than that. So can this bubble continue? Of course it can continue for some more time. But what happens when some amount of money shifts from the bond market to equity markets? So in our usual metrics, in a way we monitor equities, we will say this is the P multiple, this is the growth, and so this would be the value. But that matrix is failing in the markets today because the amount of liquidity which is being pumped. So the people who are buying, let's say a 50 PE company, what are they saying? They are saying that if my dividend yield is 1%, and if I have visibility of any Indian company, for instance, if it Titan, if it is quoting at 50 PE, as long as I have conviction that it can give me 2% dividend yield, and over the next 20-year time frame, it can grow at 5% also or 7% also. So it is better to put money in Titan than to put money in Switzerland bond. Because in Swiss bond, I am sure to lose on one hand, and second, I don't even have a choice of getting that even 5, 7 or 10% growth. So the way the equities are getting valued is because of this liquidity, people are comparing between what is the best way, whether we should be in equity or we should be in bonds. Now, this is what keeps me very bullish when I come on television. Even at the Brexit day, I was very fearless to say India ka teji continue hai. I said that it will not last for more than 2 hours. And actually it happened that the Brexit scare didn't last for more than 2 hours. And the conviction actually is coming because of these conditions. So those पानी उधर ही जाएगा जिधर ढलान है, तो पैसा उधर ही जाने वाला है जिधर growth है, इसमें कोई dispute नहीं है. Now we are talking that the GST will add 1% to India's economic growth rate. 50% of the global countries are not even growing at 1%. Forget the increment of 1% because of one event. So I think, the kind of money which actually can come in this country can actually surprise a lot of people, trust me. If these conditions remain, and I think this masala bond which is being launched, which all of you must explore, early stages, there is a lot of struggle, hurdle, this may happen, that may happen, but if you get 9% yield from best corporates, I am very sure, Diwan Housing Company got 20,000 crores. They wanted to raise 1,000. They got 20,000 crores in 4 hours. So I think this is spelling where the liquidity is. So India will greatly benefit and will continue to benefit till the time actually this reverses.
How long will it take before the last?
But as long as it is lasting, take advantage. Yeah. I am saying you increase if you do not have a ALM mismatch, like we have compulsion. हमको तो सांस सांस चला के चलना पड़ता है. आपको क्या कंपल्सन है? आप लंबे लंबे समय का पैसा बोरो करो जब तक मिल रहे. I think, as I said, मेरे को 12 महीने में तो रिवर्सल नहीं दिखता है, and we will review it after 12 months. As I said, which I emphasized that the other opportunity which I see in great way, that I am happy we actually made a big presentation in Japan. Again, not out of any competence, but out of serious curiosity as to where that country is going. And I can say a lot of people who are sitting in hall must explore that rather than borrowing money in US dollar, should we borrow money in Japanese yen? And आपको जो assumption लगाना है आप लगा लो. So whether it is US dollar, Japanese yen or Indian rupee, we have made a comparison. So rupee will have to, Japanese yen will have to appreciate to 52 and rupee will have to go to 118 in a 10-year time frame for you to lose money. I'll repeat this, and we have authentic data. Rupee will have to appreciate to 118 rupees, while the Japanese yen against USD will have to appreciate where it is 105, 108 today, will have to appreciate to 52 for you to lose money. And if the Japanese government is saying that we want 2% inflation in a medium to long term, then how can the bond prices remain negative forever? It is absolutely against the logic that you cannot have a 2% inflation and negative yield on the bond. So I think there are great opportunities which lies ahead for the people who are actually wanting to borrow. It's not an easy thing, but it's not that difficult also, as it may seem, because there are lots of swaps which are available. So if you want to actually borrow in dollar, you can still swap it in yen at some cost. And if you can do it for 10-year time frame, I think the cost of funding will work out very cheaper. If your call on Japan is what we believe, because we believe that yen could even go to 200 in a 10-year time frame. I don't know where it is going to go. So, and it is not a speculation. So what I am suggesting is, if your portfolio is 100 rupees of borrowing, so you don't go and borrow 100 rupees in Japanese yen, but you borrow 5 rupees or 7 rupees, and if you borrow it for a 10-year perspective, it could actually pay good dividend. Sorry? Yeah, absolutely. Honest, absolutely. That is the whole idea. So, as I said, it is more a case of relative versus absolute. So the world is moving more in relative sense. So when we look at absolute values, we'll be very surprised that even we are struggling to find absolute values in stocks, in spite of being bullish on the market. बहुत आसान नहीं है अभी कोई मल्टीबैगर खोजना. So I am just saying, but when you look at in a relative sense that XYZ company is trading here, and it should a relative sense this is better. Or when I look at, because there is a 50-year bond yield negative or 30-year bond yield negative, so equity is looking cheap even at a 15p multiple or 18p multiple or 20p multiple. This is about India. So I think these are the themes or sectors which we are very positive on. So increasing urbanization, consumer credit, new age infrastructure, which is in digital India, smart cities, high speed rails, industrial corridors, availability of power. We think all power consumption industries will do tremendously well after 2-3 years once all this Uday and all is settled, and once the power availability actually increases and you can rely that you can get continuous power at 3 rupees, 3.5 rupees. So I think a lot of power intensive industries will do well. Import substitution, again it is the whole defense sector, make in India. So in conclusion, what I would say that don't be scared of volatility, because it can be your greatest friend if you are on the right side. Second, we are not suggesting or advocating to do any speculation. So this is why you need to have a portfolio approach rather than putting all your eggs in one basket. I have not mentioned the word derivative here because that is a very dangerous word and you should not get into that, because that tantamounts to be actually saying that you are actually getting into speculation.